What exactly is the Metaverse? How should you invest in it? Given the hype surrounding Facebook's rebranding to Meta, these are the two questions that perplex investors. Of course, there are cryptocurrency tokens such as Mana, Sand, AXS, ENJ, and others that provide an entry point into this potentially limitless space, brimming with immense potential. But what about pre-existing companies or corporations embracing the metaverse and working to create the internet's next generation? Investing in these companies' stocks could also be beneficial in the long run. For those who wish to remain invested or involved in the metaverse for as long as possible. In today's video, we are showing you the top 3 metaverse stocks to buy now. Watch this video till the end, and if you enjoy such content, make sure to like this video, subscribe to our channel, and turn on the notification bell icon to never miss another upload of ours. Here we begin. So what exactly is Metaverse? The Metaverse is the future of the internet, according to CEOs such as Mark Zuckerberg and Satya Nadella. It could also be a video game, or is it a more uncomfortable, worse version of Zoom? It's difficult to say. The Metaverse is defined as an integrated network of 3-dimensional virtual worlds. These worlds are accessed via a virtual reality headset, with users navigating the Metaverse via eye movement, feedback controllers, or voice commands. The headset immerses the user, stimulating what is known as presence, which is created by creating the physical sensation of being physically present. To see the Metaverse in action, consider popular massively multiplayer virtual reality games like Rec Room or Horizon Worlds. Players use avatars to interact with one another and manipulate their surroundings. However, the broader applications beyond gaming are astounding. Concerts within the Metaverse are being experimented with by musicians and entertainment labels. The sports industry is following suit, with top franchises such as Manchester City constructing virtual stadiums where fans can watch games and presumably buy virtual merchandise. Perhaps the most far-reaching applications of the Metaverse will be in online education and government services. This is the widely held view of the Metaverse, a VR-based world separate from our physical one. People can socialize and engage in a seemingly limitless variety of virtual experiences, all supported by their own digital economy. How do we invest in Metaverse? There are compelling reasons to invest in the Metaverse. According to third-party research firms like Prophecy Market Insights, Grandview Research, Bloomberg Intelligence, and others, the Metaverse could be worth $800 billion or more by 2030, making it one of the decade's great secular growth trends. The Metaverse is also still in its early stages. Consider that Facebook only rebranded as Meta Platforms in October 2021, sparking public interest in Metaverse stocks. Today's investors can get in on a potentially profitable trend early. Let's think about how to invest in the Metaverse. Can you invest in the Metaverse? Yes, you can make investments in the Metaverse. However, the Metaverse is not a single digital world. There are numerous Metaverses to explore. In the cryptocurrency space, for example, the two of the most popular are Decentraland and the Sandbox. Mana and Sand are both native currencies for their respective Metaverse platforms, allowing users to buy digital real estate and other items. As more people use these platforms, the value of the tokens may rise. However, investing in Metaverse cryptocurrencies is difficult because it is difficult to predict which platform will ultimately be the most popular. Furthermore, they are not all the same, so thorough research is required before investing. Let's now talk about the top 3 Metaverse stocks to buy. First is ETFs, so you can prefer the Roundhill Ball Metaverse ETF. Roundhill Ball Metaverse ETF is one of the top Metaverse ETFs in the digital world, focusing on creating an immersive virtual reality experience. The performance tracker, it is intended to provide exposure to the Metaverse. It is divided into 7 categories: computation, networking, hardware, and many others. Compute, companies that enable and supply computing power to the Metaverse. Networking, businesses that provide consumers with real-time connections, high bandwidth, and data services. Virtual platforms, firms that create and operate immersive digital, often 3-dimensional simulations, environments, and worlds in which users and businesses can explore, create, socialize, and participate in a wide range of experiences. Interchange standards, companies develop tools, protocols, formats, services, and engines that serve as actual or de facto interoperability standards and enable the creation, operation, and ongoing improvement of the Metaverse. Payments, the provision of support for digital payment processes and operations, including fiat on-ramps, to pure-play digital currencies and financial services. Content, assets, and identity services, the design or creation, sale, resale, storage, secure protection, and financial management of digital assets linked to user data and identity. Hardware, the sale and maintenance of physical technologies and devices used to access, interact with, and develop the Metaverse. The investment seeks to replicate the performance of the Ball Metaverse Index before fees and expenses. The index. It also monitors the performance of globally traded equity securities issued by companies that engage in activities or provide products, services, technologies, or technological capabilities to enable the metaverse and benefit from its revenues. The term metaverse refers to a future version of the internet. In most cases, at least 80% of the fund's net assets will be invested in metaverse companies, which may include ADRs or SPACs. The fund is not diverse. The next stock you can refer to is Matterport. Look no further than Matterport stock if you want to capitalize on the metaverse trend. Matterport, which was founded in 2011, transforms physical space into a digital twin that is a 3D model using a variety of cameras, software, and applications. Matterport's technology is already familiar to anyone who has seen a 3D virtual property tour. This digital 3D model can be used in a variety of ways, including providing a realistic look at a home for a real estate agent to use for virtual tours, which reach far more potential buyers than a traditional weekend open house. However, the company's value proposition does not stop there. Indeed, the applications for Matterport's technology are numerous, ranging from retail to construction to engineering. Moreover, as more of the physical world becomes virtual, the addressable market for Matterport's technology becomes clear. It is essentially every building and country on the planet. Matterport estimates the serviceable addressable market to be 1.3 billion spaces worldwide, out of the estimated 20 billion spaces suitable for 3D reconstruction. If you do the math, Matterport has only penetrated less than 1% of its addressable market. Simply put, this is a story with legs. The first reason to like MTTR stock is that it is a pioneer in a massive and largely untapped market for digital reconstruction. The company claims to manage 5.6 million spaces, which are digitized building scans. It also claims to have 100 times the number of spaces on its platform as the rest of the market. Scalable business model. Matterport is appealing because of its incredibly scalable business model. The company has approximately 385,000 free subscribers and 54,000 paid subscribers and operates on a freemium model. First, customers are attracted by free subscriptions. Then, as they recognize the value and cost-saving potential of Matterport's 3D data, they gradually transition into paid subscribers. Subscription-based businesses have two outcomes. First, there are large margins. For example, Matterport's subscription business had a 77% gross margin during the quarter, indicating the potential for significant profit growth as the company expands its subscriber base and shifts away from product-based sales. Second, because subscription-based business models are recurring, they provide greater visibility into future revenue streams. This means less volatility than book-and-ship product manufacturers whose demand trends are more volatile. Finally, you can invest in Unity software. What happens when one of the most promising growth stocks of the last 2 years falls more than 71% year-to-date? If the stock is Unity software, you should consider buying on the dip, because it will most likely rise when the market stabilizes. Therefore, we believe in Unity software stock. Unity creates and distributes 3D content. It is a significant player in the game development industry. The platform offers a comprehensive set of software solutions for developing, deploying, and monetizing interactive real-time 2D and 3D content for mobile phones, tablets, PCs, consoles, and augmented and virtual reality devices. You've probably played games like Temple Run, Angry Birds, or Super Mario Run that were built on Unity platforms. As part of the market sell-off in 2022, a Unity stock had been steadily declining. In November 2021, the company will reach a value of $210. As the pandemic subsided and the gaming industry cooled, so did Unity stock. However, the stock has dropped more than 14% since the release of its Q1 2022 earnings on May 10. Revenue was $320.1 million, up 36% from the first quarter of 2021. Create Solutions revenue increased by 65% to $116.4 million. After that, Operate Solutions revenue increased 26% to $184 million. Finally, Strategic Partnerships generated $19.7 million in revenue, an 11% increase over Q1 2021. These are all very good numbers, so what accounts for the drop? One major reason was the company's poor guidance for the second quarter of 2022. Revenue guidance for the second quarter was $290 to $295 million, up 6% to 8% year-on-year, but down nearly 8% quarter-on-quarter. Revenue guidance for the entire year was $1.35 billion to $1.42 billion, an increase on 22 to 28% year-on-year. However, Unity's previous guidance for 2022 predicted 36% growth. These figures received a big thumbs down from the market. 2022 revenues will be low due to a glitch in Unity's Operate Solutions segment. Software issues plagued its audience pinpointer tool, which delivers targeted audience campaigns. As a result, a large amount of data flowing through Unity platforms was not analyzed, so the company could not monetize it. Revenue estimates reduced by nearly $110 million as a result. Let us know your views in the comments below.